Alright, so in today's video we're going to be going over how to understand trend lines, how to trade the trend, and how to become profitable while using pure price action. So one of the main reasons why people trade pure price action is because it gives them accurate entry points and accurate exit points. Some traders out there think that trading with indicators isn't exactly trading. Some people think that trading with indicators is cheating, but I've got something to tell those people. They have no idea what they're talking about, and there's nothing wrong with trading with indicators. There's nothing wrong with trading pure price action, but trading with indicators does have its benefits. It can help you get into trades, it can help you get out of trades. It's great. I personally think it's amazing. I trade with indicators. I suggest you trade with indicators. I suggest anybody who's starting out to trade with indicators, the professionals trade with indicators. People who say they only trade pure price action, it's just a big ego flex. It doesn't really matter. So, let's get into this. How does somebody trade a breakout? So let's get into this right now. I'm going to get into the first couple of trades over here on this chart. So today we're looking at Tesla April 5th. As we can see, it was a bearish day. Market starts to drop from market open. As we can see, a good entry point would be right around here, holding on to this trade. A little retest, possibly a re-entry, and going up, maybe another re-entry, going up, and we can see that it stays within this zone right here. It's bouncing off this level, and it's also bouncing off this level. Now, as we see, it's going up, and it doesn't necessarily hit this level again, but it does hit our bottom level right here. Hits it once, 2, 3, 4 times, and over here, based off of past performance, I'm expecting that it would hit this and go back up, but it didn't. It broke through, and it towards the downside. Price can also break through to the upside if it bounced over here and went down and broke above this line over here, but it didn't do that. It broke towards the bearish side. So here would be either a good entry point to a put or confirmation to stay in that put. And then the market drops all the way down to 183 from 187. $4 doesn't sound like much, but with an option contract, it is. Keep in mind that one option contract is equal to 100 shares. So, as you can see, here's another trend. We've got this bearish trend right here, and it's a very, very narrow trend. We don't always have narrow trends, but having narrow trends basically means that the market is moving quickly, and it's a great way to make money, but it's also a great way to lose money if you don't know what you're doing, and if you don't have the right risk management, and if you are just a newbie to the market and don't know market structure, you don't know how the price moves. So as you can see, it does the same thing over here. It bounces off of these bars that I've created. So here's one, bounces off of that. It doesn't bounce it off over here, but even if I was to draw a line from right there to right there, you could see that there's another breakout right here, which is confirmation that it's going to continue to go down. So even if I move this over here and make this more narrow, because it's of the velocity of the price, as you can see over here, touches our levels, right, hold on, right there, and right there. It's bouncing off of that, staying within this, and over here, I would expect it, hold on, this isn't exactly straight, let me move this over so that it's a straight line. So you can see, it's bouncing off of here, let's just put this over here. It's bouncing off of this, and I would expect it to hit this and then go back down, continue into this into this narrow little chute, but it doesn't. It breaks towards the upside, and it goes horizontal, and eventually it goes back up. As you can see over here, there's a period where it's hitting this support and resistance level, breaks through right around here, goes towards the upside, retests it a little bit, and goes all the way up. Retouches, downward break, possible upward break, going down, and goes all the way over here. So, in order to trade this, how does somebody get good at understanding this? How does somebody actually trade this? Well, it takes practice, and the only way that you can develop the skill is by putting time in on the charts and watching the price move, either when the market is actually trading live during the 9:30 to 4 o'clock hours Eastern Standard Time, or using a trading simulator app and knowing and understanding and learning how to trade from there. So when you're in this, you can actually see that the market throughout these minutes, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 9, 20, 21, 22, 23, 24, 25, 50. This is like 30 minutes right here. You're going to be sitting here watching this, and you're going to realize that it's hitting this level over and over and over again. And you're going to expect it to hit it again, but it doesn't. So you stay in it, expect it to curl upward, but it goes back down. So, and the moment it hits our second band over here, that's another confirmation that it's reaching the low point. It might be a good idea to exit, but don't always listen to the indicator. So, the way to do this is to actually sit by the computer, watch the market, watch the price, and then you'll be able to trade more effectively. Now, how else can you learn this? Well, you can reach out to us, and you can send us a message. We'll get back to you as soon as possible. We'll be glad to help you.